G'day guys, Scott from FP Trader here. Just want to bring you a quick video update on a couple of trades that we have open and a couple of other trade ideas that are on the boil right now. So basically, US dollar, Japanese yen. This is a bit of a stuff up. Basically, yesterday, as we talked about in the trade update video, there was a really good level to be getting out at. It's around the 119 level now. I was offline yesterday. I had some internet problems, so that's one of the perils of trading. Wasn't too worried because at the end of the day, these are very small position sizes, and ultimately they don't affect how I live. Essentially, they're not multi-million-dollar trades or anything like that. If they were, I would have been slightly stressed, but because they're so small, I mean, it can move around a couple of hundred points and really not affect me that much. So looking at this particular setup though, you can see it's actually hit that 119 target level, which is what we talked about. It actually spiked through again, as we discussed. The stop run, it's basically penetrated through. There was some news here, which obviously did create a little bit of craziness. Obviously, that was to do with the Swiss bank announcing their intention not to utilize gold, as I guess a form of backing for their currency, not be required to hold a certain percentage of their asset balance sheet in gold. So that's really kind of put the market on a bit of a tilt yesterday. It would have been great to get out of this trade. I'll be straight up honest with you. I would have loved to have got out at 119, but again, internet trouble, that's the way it goes. I'm happy to hold this trade for now, to be honest. There's nothing that sort of indicates to me the longer term picture has changed. And like I've said to you, I believe the US dollar Japanese yen pair, ultimately it's going past 120. I mean, there's no question. I thought 119 was a good level to get out at, which it would have been. We could have got in at a lower price, done the whole thing again, but that's the way it goes sometimes. So happy to hold this trade at this stage, and we'll move on to the next trade. If you are looking to get into this trade, I would probably want to see it pop up to 118.50 before retesting this level, and then you could have another crack at a long on that particular trade. Potentially with stops below 117.50. Targeting sort of at this stage, you want to be targeting 119 or 119.50, or even higher if you're prepared to hold it for the longer term. So let's move on to the euro dollar, US dollar. Now again, this trade is one of those things. It got down to our break even level yesterday. This one's been dicking around for a little while, and I'm sort of at that stage where I'm thinking, well, what's going on here? What's going on here? Are we going to see, I was sort of thinking that yesterday when I was seeing this action here, this bang, 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 this, basically tapping this level of support and resistance through here. That's a bit of a sign that we were looking for a reversal, but on the bigger picture, we have this downtrending support line, which the price gets to and it just fails. So, I'm in two minds about this at the moment. Obviously, I think, longer term, euro dollar, it's weak. US dollar, it's strong. So, fundamentally, we're on the right side of the trade. But, again, I'm having some second thoughts about this going forward. So I'm going to watch this today. If this starts popping up through this level here, I'll probably be cutting it, and moving on. There's really no point sticking with it at that point. That's the unfortunate thing when you trade, on the slower time frames. And again, the reason I'm doing that is essentially, for you guys, so that you can follow along with the trades. I typically like to be very, very short term, but if I'm trading on a 1 or 5 minute chart, by the time I get the trades out to you guys, it's, half the trade's already done generally. So, uh, you know, the idea of this is so that you guys can actually follow and make some money and see what we're actually looking at, because the structure doesn't change whether it's on the 5-minute chart or the 1-hour chart. The structure of the market is exactly the same, albeit a little bit more chaotic on the 1-minute chart. Right, so essentially with this, again, we're looking to see if this level holds. If it does, great. We'll retain our short. There's not even really a good pivot trade there today. It's like 8 points away, so it's not really worth doing too much with at this stage. So we'll just sit on that. There is a hell of a lot of news coming out. If we have a look at the economic calendar, we've got a crapload of news. So the major ones today are really going to be around the RBA interest rate decision. We've got the RBA interest rate statement. We've got basically, we've got some European unemployment numbers. We've got PMI out of the UK. We've got producers index. So we have got a fair bit of news sort of spread all over the place. And then, towards, I think we've got some people speaking as well. So let's just have a look. I'll just double click on here and we'll clean this up a bit for you. Yeah, so basically, yeah, there's a bit of Asian data, a lot of Asian data actually coming out today, which is fair enough. So that brings us to our next trade, or our trade idea for the day. We're actually looking at the Aussie dollar, US dollar. Now we're looking for a short here. Now it's on the back. It's not actually on the back of that. I guess the interest rate data, although that may have the potential to move this basically straight to our target, today, which would be fantastic. So basically what we're looking at here is, this is the Aussie dollar US dollar on the 1-hour chart. Now you can see it's it's in a downtrend. That's at the moment. That's pretty sort of clear. If we head back out to the longer term, you can see it's just trending down. It's not sort of screaming away at this stage, but what you've got to remember, particularly about the Aussie dollar, is it's very commodity heavy, if that makes sense. And part of the the voters in Switzerland rejecting that referendum for the National Bank, the Swiss National Bank, to hold 20% of its balance in balance sheet in gold, basically means Australia, being the second largest producer, is going to suffer. And that, coupled with US dollar strength across the board, and falling oil prices, and potentially the Fed's moving to, well, not potentially, the Fed's in the US are definitely going to be moving to raise rates in the next year. It sort of favours sell trades, obviously from a fundamental basis, which is why it's downtrending. But there is a couple of good levels, and obviously the first one here is this sort of level of support and resistance between 85 and 84.90. It's at the bottom of this range now. Now I'm comfortable to actually take a short at this level, so I'm actually going to crank that up. Okay, so we're going to actually put a half-size position on. What we're looking at here is essentially, I'll just put that on now, so we're done. We're actually looking to put a stop around. Well, let's just drag this to where we think it actually should be. Let's do a 40 and a 40, and then we can actually drag. That's one thing I love about the FXCM platform, the ability to drag these around. So I think realistically, we're going to be needing to place our stop above 85.50. That's just the way I'm thinking at the moment. You can see there's a couple of levels where it's had a crack, and I think based on where I'm anticipating this to go, I'm actually going to have a crack around the 84 level. Now that is a fair old way away, and it's about a 2 to 1, 1.5 to 1. You don't have to have your stops as wide as that, obviously, but that's me. Probably a safer bet if you wanted to. You could possibly even bring it up into this zone here. Again, not a great risk reward, so you'd have to, if you were going to do that, you would have to, and you still want to just stop in the same level. Yeah, you want towards the bottom of that range, and you probably want to move your stop tighter. You could possibly even move your stop. There you go. You possibly even move your stop down to here if you wanted to, but again, it's a little bit close, and you know you've got to give this trade a bit of room to breathe. It's not going to do its thing, you know, overnight, and potentially with the Aussie interest rate decision today, you've got to remember that essentially, you know, that's going to make the market super volatile. So, you know, we may actually see this level to the downside hit today. We may see our stop hit today. So you just got to be sort of super careful when you're placing your stops that they're behind some decent levels. You know, I mean, if you want to be super safe, you'd put it up here, but it's just too far away. So the other option, which you could do, is obviously, you know, bring it up here, but only take a position size that is like a quarter of your normal position size. So instead of a half position size, which is what I'm taking at the moment, you could potentially do like I said, a quarter size. You know, which will allow you to have wider stops and essentially not take as much risk. So, alright guys, that's it for now. Basically, I'll enter that trade onto Profitly and we'll go from there. But if you've got any questions, you can reach me at FatBTrader, or you can tweet me. Twitter's really good because I can respond to you instantly, whereas email, I get so many emails, it's just out of control. So it's a bit hard to answer them all quickly, unfortunately. Alright guys, hope that all makes sense. Till next time, trade well.